price of oil and volatile swings. The extreme volatility that has gripped the oil markets for the last 18 months or so is showing no signs of letting up or slowing down, with oil prices more than doubling since the beginning of the year, in spite of an exceptionally weak economy and in a recession, or whatever have you call it. The instability of oil and gas prices is puzzling government officials and economists who fear it could jeopardize a global recovery. It is also hobbling businesses and consumers who are already facing the effects of a stinging recession or depression, or again, whatever you want to call it, as they try in vain to guess where prices will be a year from now, or even next month. A wild run on the oil markets has occurred in the last 12 months. Just last summer, prices surged to a record high above $145 a barrel, driving up gasoline prices to well over $4 a gallon. And as the global economy faltered, oil tumbled to $33 a barrel in December. But now oil has risen 55% since the beginning of the year to approximately $70 a barrel, pushing gas prices up again to $2.60 a gallon, according to AAA, the Automobile Club. To call this extreme volatility might be an understatement, said Laura Wright, Chief Financial Officer at Southwest Airlines, a company that has sought to insure itself against volatile prices by buying long-term oil contracts. Over the past 15 to 18 months, this has been unprecedented, and I don't think it can be easily rationalized. So then, volatility is the key word here. Volatility in the oil markets in the last year has reached levels not recorded, at least since the energy shocks of the late 1970s and early 1980s, according to Barclays Capital in New York. These extreme gyrations have rippled throughout the world economy. The automakers General Motors and Chrysler have been forced into bankruptcy as customers shun the gas guzzlers. Airlines are on pace for another year of deep losses because of rising jet fuel costs, and households are already crimped by falling home prices, mounting job losses, and credit pressures are once more forced to monitor their spending as energy prices rise. And while the movements in the oil markets have been similar to swings in most asset classes, including stocks and other commodities, the recent rise in oil prices is reprising the debate over the role of investors or speculators in the commodity markets. Government officials around the world have become increasingly concerned about a possible replay of last year's surge in oil prices. Energy officials from the European Union and OPEC, meeting in Vienna last month, said that the speculation issue has not been resolved, and that the 2008 bubble could easily be repeated without more oversight. Many factors that have pushed oil prices up last year have now returned. Supply fears are creeping back into the market, with a new round of violence in Nigeria's oil-rich Niger Delta, crimping production. And there are increasing fears that the political instability in Iran could could spill over into the oil market, potentially hampering the country's exports. The OPEC cartel has also been remarkably successful in reining in production in recent months to keep prices from falling. Even as prices recovered, members of OPEC have been unwilling to open their taps. Neither the organization nor its key members has any real interest in halting the rise in oil prices. Top officials say that OPEC's goal is to achieve $75 a barrel of oil by the end of the year, a target that has been endorsed by Saudi Arabia, the group's kingpin. But unlike last year, when the economy was still not in recession and demand for commodities was still strong, the world today is mired in its worst economic slump in over half a century. The World Bank has warned that the recession would be deeper than previously thought, and said any recovery next year might not even happen, or it could be subdued. And once again, there's something more going on here, something much bigger. Fossil fuels, they're on the way out. They're hurting the earth. They're changing the climate. It's time to start moving away from fossil fuels. And this could be one way it gets done. Crude oil prices appear to have been divorced from the underlying fundamentals of weak demand, ample supply, and high inventories. Some investors are betting that the worst of the economic crisis may be coming to an end, or it may not, and are bidding up what they perceive will become scarce resources, theoretically, supposedly, if demand kicks back up again. So this uncertainty is making it difficult for companies to plan ahead. People do not like that kind of volatility. They want to know what their costs are going to be. And for the global airline industry, the latest price surge is certain to translate into more losses this year. Airlines are expected to post losses of at least $9 billion this year, following last year's losses of $10.4 billion. And airlines have not yet felt the full impact of this oil price rise. To survive the economic crisis, many airlines have cut fares or cut routes and raised fares and fees, like charging for luggage, while some of the industry's top players have merged. Likewise, automobile showrooms have emptied out as gasoline prices rose, forcing General Motors and Chrysler to cut production sharply as they wade through bankruptcy. Meanwhile, they are under pressure from Washington to improve their fuel ratings. So then, oil has never been very stable. And if you look at history, you have to expect more volatility. Again, the key word here is volatility. Oil prices are very volatile. And there's something wrong with this whole picture, this whole equation. And once again, everything is connected. Like I say, perhaps fossil fuels are supposed to be going away, because the reality of it is that they are changing the climate. They are having an impact on the climate of the planet Earth. And the planet Earth is a living being in some kind of sense. And once again, all these are more signs of the end times transition days. The transition is ongoing, happening day by day all around the planet.